Welcome. I'd like to talk briefly about why you may want to use business credit cards in your startup business. There are two great reasons for considering a small business credit card for your brand new business. One is that, unlike many other types of small business financing, issuers generally don't care what industry you're in. They don't care if it's a high risk industry or a low risk industry. They aren't really looking at a business plan or any kind of details about your business. They also make these cards available to brand new businesses. So I know business owners who have started a business and a day later applied for a small business credit card and been approved. That's because these decisions about issuing these cards are generally made on the owner's personal credit scores and income from all sources. So even if your business isn't making money yet, if you have other income to support the application, that could be a day job, other income you're earning, or even a spouse or partner who would pitch in and pay the bills if you couldn't, then you may be able to qualify for one of these cards. When you're choosing a small business credit card for your startup, couple of things to understand. Some of these cards report all activity to the owner's personal credit. In that short link you see on the screen, nav.com/reports, you can find out which card issuers report activity to the owner's personal credit. Most of these small business credit cards also report activity to at least one of the major commercial credit agencies, which means they can help you build business credit. And the second link you see here, nav.com/business-reports, will list the major credit card issuers and which business credit bureaus they report to. So as you're choosing a card, you may want to choose one that will or won't impact your personal credit and will help you as you build credit for your business. Now, you do want to be careful. We know many small business owners who have obtained multiple credit cards in order to start and grow their small business. Perhaps they just weren't able to qualify for other types of financing. But you also don't want to get in over your head. So always make sure you understand the interest rate. It's expressed as an annual percentage rate, or APR. Compare that and understand the APRs for different circumstances. For example, if you default or pay late, will your interest rate go up? And what happens if you want to take out a cash advance? What will the interest rate be? Read those details. You can also leverage the grace periods on your cards. So let's say you have a credit card with a billing cycle that closes on the 15th of the month, and you can find this on your credit card statement. It will tell you the statement closing date. If you make a purchase the day after that closing date, then it won't appear on the next bill that you get. That purchase will appear on the subsequent bill. And that means that if you pay in full to take advantage of your grace period, you can avoid paying interest for almost 2 months on that purchase. So for larger purchases, this is a way for you to basically create net 30 or net 45 terms for your purchase, where you can buy something now, pay for it later, and avoid extra interest charges. Now, you always want to make sure you absolutely pay on time, especially with small business credit cards, because most issuers reserve the right to raise your interest rate if you're late by even a day with a payment on your small business credit card. So make sure you set up auto pay. As long as you make the minimum payment on time, you won't be in trouble for missing a payment, and you won't be subjected to potentially a late fee and or a higher interest rate on your card. Now, as you're shopping for a credit card for your startup, a great place to start is with Nav. We help match business owners to credit cards. And our marketplace is very extensive, and we're keeping it up to date with all the changing issuer requirements that are happening throughout the year. So if you sign up for a free Nav account, you can do that at nav.com. It will allow you to check your personal and business credits securely with no impact on your credit scores. And then we'll also match you to credit cards with qualifications that fit yours. So, whatever the issuer is looking for, we're going to present cards that are a good match based on your qualifications. Now, it's not full pre approval, so it's not fully guarantee that you'll get that card, but we'll definitely help you narrow down your shopping experience so you can find the right card for your small business. In addition, if you go to the URL you see there, nav.com/cards, you'll see our very extensive credit card guide that will give you a lot of information on selecting the right credit card for you. NAV customers who do have a NAV account and use our MatchFactor tool are 3.5 times more likely to be approved. So we want to help you find the right card for your business. As always, if you have questions and you're on YouTube watching this, feel free to drop your comments down below or questions, and we'll be happy to try to help you answer those questions and get the credit that you need. Thanks for watching. See you again.